Hey everyone, this is Tim Dial with Nexa Mortgage, and just wanted to put this short video together because I think this is a very important time for first-time home buyers. If you're somebody who, if you are a first-time home buyer, if you're wanting to purchase your first home and you've been kind of waiting for rates to drop and things like that, I feel like this is an extremely important period of time, and I'm going to get into really quickly why. We have seen the interest rate kind of fluctuate over the past few months, go up and down, up and down, up and down. The Fed made their first rate cut in September, but the rates have actually gone up a little bit since then. However, they're going to continue to cut rates. We think they're going to cut in November, like right after the election, and probably again in December. And they're supposed to make at least 4 rate cuts next year. And there's a lot of other data that suggests that the economy may be headed for a recession next year. Some people have it at like 40 some percent, and other experts have it at over 60% chance. So there are some possibilities there as well. And of course, if we do go into a recession, or if it's something if it's not quite a recession, but if the markets really decline, then you're going to see the interest rates drop even faster. So as a result, I've been hearing a lot from people who are like, well, I'm just waiting for the interest rates to come down before I purchase, et cetera, et cetera. And what a lot of people are not realizing is how much money that's going to cost them in the end. And that's because when the interest rates drop, there's a phenomenon that happens over this past year or so because of the high rates. There hasn't been a ton of buyer activity. There have been a lot of buyers who have kept out of the market. But when those rates come down, the buyers are going to enter the market, and there's going to be a huge influx of buyers that have been just waiting. And when that happens, that increase in demand and that continued limited supply of homes is going to cause home prices to surge dramatically. You're going to see at least probably a 10 to 15% increase per year for a couple of years when the rates drop. And as a result, you're going to end up, if you, let's say you're looking at a house today that's 400,000, 2 years from now, that same house is going to be 480 to 500,000. And, and so you're going to be paying a lot more for the same home if you do wait. Additionally, you're going to miss out on all that equity opportunity of that price increasing. You buy it now at 400, it's worth 480 in 2 years. Then you get that $80,000 in equity instead of having to pay an extra $80,000 for the home. Additionally, if you do buy now at the higher rate, you can still refinance in a couple of years and drop your payment and be in a much better position. Just to kind of illustrate it, um, I did add a blog to my website today, and I'm going to pull that up real quick and then share my screen with you to just kind of give you a better idea of what it means and how it works. So let's see here. Just a second. Okay, so all right, so I'm going to share my screen with you really quickly here and then go through a little bit of that just to kind of show you what I'm talking about. Um, so this is my blog for my website, and today's blog, why is now the best time to buy a home before prices surge? And and it's basically, I wanted to get into this example that I put on here because this is a very true example of what's going to happen. You're looking at homes. You find a house that's a $400,000 house that you want to purchase. But then you're like, gosh, the interest rate's really high. I think I'm just going to wait, right? Well, the interest rate on that, or the payment on that, just principal and interest, not including taxes and insurance, but just 6% interest rate right now at that $400,000 price would be like 23.98, right? So that's kind of what you'd be looking at. So if you waited 2 years and you paid 484,000 for that same home because of the price increase, well, sure, your payment would only be 2309 from waiting 2 years, which is lower than that 2398 at the higher 6% rate. So your payment's a little bit better, but you're losing the $84,000 in equity, and it actually be more than that because you're going to pay that mortgage down a little bit over 2 years. You'd have more equity than 84,000 in the house. And so you're going to lose that just to save that, $90 a month for waiting 2 years. Additionally, you don't really save that because after the 2 years is up, if the interest rate's 4%, you'll be able to refinance it to around 1910. So that 1910 is still going to be, $400 less than the $484,000 price at 4% interest. It's going to be $400 more, right? So you end up paying $400 less a month, and you gain the $84,000 in equity, and that's the difference in buying now versus waiting, because we know that the prices are going to surge. They were surging before, like, right around COVID, the market got really hot and the prices surged like crazy. We had people who were paying more than their appraised value to get into a house because there'd be 4 or 5 offers on a house. And in order for them to win it, they'd have to pay over the asking price, and they'd have to remove, a lot of times, the appraisal contingency, meaning that if the house doesn't appraise for the purchase price, they would bring extra money out of pocket to cover that difference. And a lot of people, a lot of first-time buyers just don't have that kind of cash. We're using a lot of home buyer assistance and zero down type programs and stuff like that right now for customers. So I know people don't have the kind of money to just pay over appraised value, especially if you're a first-time buyer. Those buyers who were doing that were people who were selling a house and buying another house, and they had equity that they could put into that other house. And for the most part, they just didn't have, the first-time buyers were just kind of left out in the cold during that period of time. So that's the other risk here, is that if you do get into a situation that's extremely competitive, like we were in before, then, if there's 4 or 5 offers on a house, then the first time buyers are going to be left out in the cold because they're not going to have the cash to be able to even buy a home at that point. So there's also been some talk lately about, well, if the presidency goes to Kamala Harris, there's this $25,000 incentive they're going to give you for a down payment, et cetera, et cetera. The one thing that everybody should keep in mind is that in order for that to actually happen, there has to be an approval through Congress, and to get 60 senators to agree to give people $25,000 to buy a house, I don't think that's going to happen. I think that's a really difficult thing to get passed. So there might be something else that they come up with when that doesn't work. Like, for instance, I would recommend switching FHA to a 100% financing program, and maybe requiring a little higher credit score and a little lower debt ratio or something like that to try and protect against foreclosure. But just them going out and giving people $25,000 to buy a house, and you're talking about probably hundreds of thousands of people who would want to do that. So you're talking about enormous amounts of money that it would go against the federal government's debt, which is already exploding. So I just don't really see it happening. I'd be very shocked if something like that got done. So anyway, that's a little bit about what's going on right now in the market and what I'm seeing and what I'm hearing from customers. And I just wanted to get into this really quickly and go over a few things. But there are some great opportunities right now when you consider how much the prices are going to explode once those rates drop. The biggest gains you're going to see are going to be from the home equity that you gain from purchasing now versus waiting. So that's pretty much it. If you have any questions or anything, I'm always here to help. You can always complete a loan application at www.timdial.com. That's TIMDIAL.com. And it's a simple loan application process, and we usually have you pre-approved within a couple of days, and then you're out there looking at homes. That's pretty much it. And I hope you have a great rest of your day and a wonderful Halloween. Thanks.